Welcome to another episode of Heartland Market Talk on the Open Range. Well, unless you've been living under a rock in the ag sector, the headlines, of course, is the avian flu transmission from migratory birds into Texas dairy herds, which has now spread to several states, New Mexico, Oklahoma, and now on to Michigan and Idaho. But it's also now a transmission, the second transmission in the United States. First one was in 2022, and now recently from a dairy herd in Texas, an individual getting avian flu. Now, the symptom was basically conjunctivitis. They had pink eye, essentially, and treated with an antiviral, and they're fine. Now, the fear of this activity is causing concerns for consumption. Demand may fall off. Well, there's a lot in the industry that want to say the science needs to get ahead of this. Well, you got to be careful about using the word science. A lot of people are very fearful of the word science because it seems to be subjective to who wants to put out the science. What we need to do is get the facts out. The facts are nobody will be drinking any of the milk from the dairy herds as milk is pasteurized. All the pathogens are destroyed through pasteurization. Also, as far as getting any of this into the food supply, not possible. First off, they do not slaughter sick animals, and the USDA inspects animals, and so the meat cuts are not infected and will not be in the human food chain. Now, here's the problem. That's the fact. But perceptions is what the market is concerned about, and so we're seeing a lot of volatility in the cattle trade because of this. Now, moving on, gold moving to new all-time highs again. These Middle Eastern concerns, lack of ability to pull together a truce while more death loss occurs, is becoming a problem that maybe it leads to more loss in crude oil, as we're seeing Brent crude oil again pushing to new all-time highs today, pulling the crude oil, not all-time highs, but moving to the highest levels since last year, with crude oil here in the U.S. also getting above $85 a barrel. So this is causing concerns of rising fuel prices, which occurs this time into the summer. Now, also, OPEC meets tomorrow. They're not expected to change their current course, and that is to keep their production cuts in place through the second quarter. Now it's time for Heartland Insights. Let's take a look at the June live cattle contract. This is the future delivery beyond cash trade. This is the coming second quarter cattle trade and what the avian flu has done to it. Well, last week we turned sharply lower after the cattle market having seen a nice recovery from its December lows from the demand concerns into our March highs. And now last week we turned lower. There was a mild recovery at the end of the week into Thursday's trade, but yesterday, a large $10 trading range dropped to the downside on this announcement of an individual being affected by the avian flu with pink eye. Well, today's bounce is the fact that it's not as bad as thought, and we know that if we want to talk the word facts, not the word science, that the food supply is safe. There's a concern that the beef herd could be at risk if it transmits from the dairy cattle into the beef cows, which could cause some of the older cows to go dry on their calves. Well, that would imply tighter numbers, but this small bounce is, again, the concern of consumer reaction. Same thing goes to the feeder cattle market. We turned down last week, had a bounce at the end of the week, and of course, here is Monday's trade. Sharp losses, $10 a hundredweight on these feeder cattle, which is what our Northern Plains producers receive, is off the feeder cattle market. And so, again, recovery bounce is not exciting. We need to see more lift on this to say the problem is going away. Otherwise, we have these fears of perception that as the consumers find themselves without facts, could cause them to back away from usage and causing these beef supplies to get lowered in price. Now, gold. New all-time highs again today. This leans back to our spot monthly gold chart. We were showing you this ever since the show got underway about potential breakout through a 4-year congestive period, and we've been implying that when they break out, it measures a minimum move to about the $2,450 to $2,500 mark. Well, today we almost touched $2,300 into today's close. So as you can see, the market is running, and this is even with the dollar strengthening and becoming the reality in the marketplace that there won't be 3 interest rate cuts this year. The market is pretty much accepting there's only going to be maybe 2 interest rate cuts, and yet the dollar is strengthening and gold continues to move. This is because of the Middle Eastern tensions. Well, speaking of Middle Eastern tensions, here's crude oil as well. We had this multi-month resistance just under $80 a barrel. We had showed you on the show here several weeks ago. We broke out, pulled back, held this breakout point, and now we are climbing again, touching the $85 mark as we recover here on oil prices. We said this is very seasonal, bottoming in December. with the price potential to lift these values into May and June. Well, if we look at the longer term weekly charts here, as you can see, we are still considerably down from 2022 and last year. This is last summer's highs. And so the potential to rally to $90 does not put us at any prices that we have not struggled with in the past. So for now, we seem to be trending higher on these energy values. And cocoa, we haven't looked at cocoa for a while. Last time we reported on cocoa, we were crossing the $8,000 mark. Well, now we've challenged the $10,000 mark as cocoa prices continue to elevate, and the likelihood of your suppliers of chocolate either shrinkflating your supplies, your packages, I should say, while keeping their costs high, or outright raising the cost of your favorite cocoa-derived products. Now, corn, since last week we had that friendly Thursday crop report slashing acres, had seen this large advance back to the $4.80 price range. Well, over the last two sessions, we have tailed off. Two things have caused that to happen, and that is the reality of better weather on the way for spring planting, and China telling their traders to hold back on their purchase of Ukrainian corn, which means they won't be coming to the U.S. anytime soon for corn purchases, as they're trying to raise the price of corn in China so their farmers will raise more corn domestically. Soybeans, we are finding here as well, prices pulled back from last week's recovery, and here too, better planting progress is on the way, and they're anticipating the reality of the bean acres to maintain probably 86.5 million acres. On wheat, still dead in the water as the market tries to base, waiting for some kind of free scare rally, maybe at the end of April, to break this long-standing downtrend. Today's question of the day is, why are not all markets 24-hour trading? Why do some commodity markets only trade during the day, but some trade about 22 hours a day? Well, the answer is very simple. It's called volume. They tried years ago trading cattle futures and hog futures overnight, and it was disastrous with limit up and limit down moves throughout the night session. So only large liquid markets are traded 22 hours a day. Those we call 24-hour trading. If they have high volume, we trade them for longer periods of time. That's your answer to the question of the day. Remember, you can always call us at 701-222-0221 or visit us online at heartlandinvest.com. While you're there, don't forget to check out our Heartland Market Talk podcast and sign up for our daily newsletter. And for producers, remember, we offer crop and LRP insurance as well. Thank you for joining us on today's episode of Heartland Market Talk on the Open Range.